Welcome, everyone, to this webinar on top trends and insights from the deals report for 2024 that Webb Analytics just published. My name is Craig Webb. I am the president of Webb Analytics. And while my job is to collect a lot of information and be that reporter for you, the insights and the understanding the numbers is really something left to the experts. And to that end, I am really pleased that we were able to get three experts to come today and talk a little bit about what they're seeing with regard to the mergers and acquisitions, as well as the greenfield openings market in construction supply in 25, as well as look back on what happened in 24. Now, it takes time and money to do this. And so I thank the JIAN Group and SRS Distribution for being sponsors of this report and making it possible. They didn't have any role in producing it, but their dollars at least helped pay my salary while I was collecting the numbers. Our speakers today come from a diverse set of companies that were very, very active, and I'd like each of them to introduce themselves and tell us a little bit about who they are. Jim, you're first on the chart, so why don't we start with you?
Well, good morning, everyone. Jim Hooper, Senior Vice President of M&A here at USLBM. I've been with USLBM for 9 years, been in the building product space a majority of my career. Prior to joining USLBM, I was with SRS Distribution. So with two of the most active acquirers in the space over the last 15 plus years. And I appreciate the opportunity to be with y'all.
Jim, I know USLBM is a very diverse company. Where do you live normally?
Yep. So I live in Dallas, Texas. But I'm also living on American Airlines planes, Southwest planes, in airports across the country in my role. But yep, based in Dallas, Texas.
That's great. John, you're next on my list that I see. So why don't you introduce yourself? Tell us about yourself.
Thanks, Craig. Thanks for having us today. I'm John Beeken. I'm a partner at the JIAN Group. I've been active in the building products industry for actually 41 years, I hate to say. I've been with the JIAN Group since I retired actively from Masonite back in 2022. The JIAN Group's a 30-year-old sell-side advisor. We advise sellers specifically in the building products business, primarily family-owned, mid-size, middle market, private businesses. We've been active, as I said, for over 30 years. We've done several hundred transactions, and we have today 7 partners. The unique thing about JIAN is we are all active, have been active operators within the building products business. So we speak the speak, so to speak. We are able to quickly and effectively present businesses to people like Robert and Jim in an effective manner, and use our expertise in the past, unlike typical bankers who really don't have a lot of understanding of the businesses they're selling beyond the financial process. So,
yeah. John, you're the sell side expert on this meeting today, whereas Jim and Robert are our sort of buyers experts. And let's go to Robert.
Hey guys, Craig, thank you again for inviting Nation's Best to be a part of this. My name is Robert Debs. I oversee acquisitions for Nation's Best. I've been with the company a little over 5 years. I joined soon after it was incepted in 2019. I've been in this industry, in this space, about 8 years. Prior to Nation's Best, I had the privilege to work for USLBM, where Jim is. And a little bit about Nation's Best. We're a consolidator in the space, as Craig said. Our focus is more on what we call traditional home centers, typically outside of major metros, ideally the bigger players in those respective smaller towns. So think of a 10 to 30,000 square foot retail center, oftentimes bigger, with a lumberyard out back to cater to the home builder, just as well as the homeowner that walks in for a can of paint or a hammer. So that's our bread and butter.
So we've got 2 different companies here in USLBM and Nation's Best who have different styles. And in John, a guy who's got to be able to talk several languages to various people with various needs. I want to remind people to be sure to ask questions along the way. I'm going to start by providing a bit of context to get things going here. Hopefully, can you all see the slide that says today's speakers? Okay, just want to make sure. The Deals Report's focus, which I produce, is on pro construction dealers and hardware stores. So the people who are involved in the building envelope, selling lumber, roofing, siding, exteriors, cabinetry inside. It's not a report for people who are dealing with electrical contractors or HVAC or those people. There are other magazines that look at that. I also do look at the people who basically sell to the pro remodeler, and that's usually hardware stores and home centers. And those are the kinds of people who I'm compiling when I'm putting together this report. You can get it for free for download at my website. This particular year compares interestingly to the last 6 or 7 years that I've been doing this since I started Webb Analytics. You can see that in terms of facilities acquired, and these numbers are facilities acquired on the top section, it looks busier, much busier than the past. But if you were to take out the transaction that the Home Depot did with SRS, you are removing 769 facilities from that acquisition number. So if you were to look at it with the acquisitions, it looks like a very, very good year. But the next line, if you take out those acquisitions, you can see that it actually was a slower year than the last 2 years. And when you're looking at the number of acquisitions, while we had 158 deals this past year, it's better than 2023, but actually worse than 21 and 22. And the actual number of buyers also reduced. So that's giving you some context. You also have to look at 2024 a little bit differently than you do if you average things out over the last 6 years. From 2018 to 24, about 1/3 of the deals that I've been tracking involved lumber yards or components factories. Roofing was only about 18%, landscaping 15%. But the SRS Home Depot deal obviously changed those numbers dramatically in 2024 to the point where 47% of all the companies that were acquired in facilities acquired in 24 were roofing. Now, I should say that Home Depot was a big factor in that, but actually Beeken and ABC Supply also played a role there. That's also why the landscaping numbers are out of proportion and the pool supplies numbers are out of proportion, because that's what Home Depot and SRS did. Now, you may say, well, who did the biggest deals? Who was the most active? And this is your list. Beeken and Builders First Source were 1 and 2. USLBM and Nation's Best, both on this webinar, were 3 and 4. But together, these companies, this 2, 4, 6, 8, 10 companies, represented 48% of all deals, but only 18% of all facilities, which also indicates that there's a lot of onesie-twosie deals that go on out there, or single buyers who just buy one company in a year. Actually, Home Depot just bought one company in the year. It just happened to be huge. In terms of the largest number of transactions in one particular deal, you can see that after the Home Depot SRS deal, we had several that were in the 20s. USLBM here did Texas Tool Traders, and I'll be sure to ask about that. And together, those deals were 78% of all the acquisitions. Next slide. Next slide is USLBM. And this gives you a sense of the geographic variations of where USLBM bought, and I'd be intrigued in that. I mean, Jim, I'll expect me to ask you whether there are particular parts of the country you care about. I'll go from there. I seem to be cutting off the left side of the presentation. I am so sorry about that. By the way, folks, everybody who has registered for this is going to get a copy of my slides. So you will have that going for you too. I'm also showing Nation's Best in 2024 and before. So that's what we're going to be talking about today. I'm going to go backwards here to the beginning and then cut out and stop the share and get us back to us. So, Jim, let's start with you. How would you characterize the market in 2024 compared with all those years you've been working previously?
Yeah, I would say 2024 was a challenging year, and I think 2025 is setting up to be, at least in the early part here, similar in nature. I think there's a lot of noise out there, and the noise has been there for the last several years, both on the upside and the downside. When you look at, post-COVID environment, the inflationary environment, we saw, the demand for housing that we saw, made doing deals while there was a lot of positive energy. It definitely made doing deals difficult from our perspective of underwriting deals and trying to determine what sustainable earnings would be in a normalized market. We're in a similar situation today, just on the entire opposite end of the spectrum. We believe here at USLBM that, the long-term and medium-term macro indicators in our space are positive. At the same time, we recognize the near-term headwinds that exist. And so trying to normalize that and underwrite deals has become challenging. And also just managing through a lot of the noise out there, whether it be, the potential tariff impact, what's happening just from an interest rate environment, all of those factors has made it difficult to underwrite deals. But at the same time, I think, there's still opportunities out there for us to grow, as evidenced by the map you showed. We did 11 deals in 2024 and grew in markets that we are confident in long term. So I think there's still opportunities, but definitely challenges out there.
Yeah. And there's one pin on the map that I did not show, which just involves Walker Lumber, that from Tennessee. So I should be putting that pin on there for that's on the 2025 map, but not the 2024. Robert, how would you characterize last year?
Well, last year for us was the most active year in terms of a transaction count. We did 9. But like you said in your report, small is beautiful, I think is what you wrote on there. And you're right, a lot of those deals were smaller. And I would say they were smaller for sure in deal size. It's just not by design at all, just by coincidence. I mean, obviously, just like Jim can attest to, there are tons of factors that we closely look at when we're analyzing targeted sellers out there. So it's just kind of a coincidence. And I love what Jim calls it noise, and he's 100% right. I mean, at the end of the day, there's a ton of noise out there. And like you said, a lot of it's been around for a couple of years anyway. I'm sure there's a lot more noise now with the new administration.
Can you identify what noise is? Can you give an example of noise?
Just all of it, right? I mean, interest rates are high, homes are unaffordable, the cost burden's too high, the cost of financing deals is more challenging. My answer to that is, if you look at our long-term trends, rates are where they probably should be, right? So tariffs, impact to inflation and deportation, what's it going to do to labor, and just all the things, right? But at the end of the day, like Jim said, long term, this country is solid. Recessions come and go. Housing shortage is massive. Homes are getting older, right? So for us specifically as a nation's best, all that is noise. There's a ton of thousands of company owners out there that don't have a succession plan. And talk about, John mentioned fewer buyers out there. I would say for the targeted companies that we look at, that's definitely real. I mean, there's definitely tons of similar companies like Nation's Best out there, but there are thousands more of sellers that don't have acquirers like us.
Yeah. John, is this a buyer's market?
I think it's a seller's market, honestly. Because there's a shortage of sellers. There are a lot of well-financed. Jim's right. It's tougher to underwrite these days. Interest rates weren't what they were 3 years ago. But there's some other changes that have happened since COVID and the demise of COVID with buyers is there's more cash to be spent. Private equity is very active. There's definitely a lot of noise. It's challenging for us representing sellers is we got through that COVID bubble and the sustainability question on earnings was just starting to kind of level itself out last year. And now with the advent of tariffs and other things, who knows where that's going to take it. But I really believe sellers, you look at the most active year you had, that active year was 2021 or 22, I believe, right after COVID. And why that was active is there were a ton of sellers that wanted to sell. They thought the timing was perfect. They saw the highest EBITDA earnings they've ever seen, at the tail end of all the inflation. And they sold. And now I think you have sellers that are kind of reflecting back on that and saying, well, I don't have the earnings that I had back then. So now the timing. I would suggest timing's pretty good. Again, if we can get through some of the noise of the first quarter here, timing's pretty good because margins are generally higher for folks. Maybe not margin dollars, but margins are higher for many sellers out there.
Yeah. John, you mentioned private equity and their role too, and I was just wondering when you have a dealer that has asked you to help sell them, and you tell the world that this company is available, what percentage of the potential buyers that you talk to are existing building material companies like USLBM and Nation's Best, and what percentage are private equity firms that might not have a dog in that fight, or might not have a dog in the fight right now?
Yeah, that's a great question, Craig. At JIAN specifically, we solicit far fewer private equity deals than a typical banker would. A typical process, they might take a business and go out to 500 different, potential buyers and try to forge through all that information. We typically do less of that. Now, in terms of when we do it, it's depends on whether we're dealing with a building products manufacturer, a building products wholesaler, or a building products dealer. I think you tend to see with the dealer size, there are enough strategic buyers out there today, and they're all primarily either public or privately held, some underwritten by a sponsor, but generally we're going after strategic buyers. And when you get into manufacturers and so forth, we certainly look at more pure private equity plays.
Yeah. Jim, as one of those strategic buyers, I'm sure that John goes out to every once in a while. Have your standards evolved in terms of what you look for these days, maybe compared with the original deals that were done, back 10 years ago?
Yeah, first, I just want to circle back to something John said. Of course, an investment banker would say it's a seller's market. So, but the answer to that is yes. I think as the industry has evolved, I think our industry has to start thinking about how do we become more efficient in our business. And I think what we're looking for with the targets that we're acquiring is we want to make sure that we acquire companies that maintain their legacy, maintain that local feel, but also recognize the opportunities that exist joining a larger company. The investments that we're making in technology, the investments we're making in taking this industry to another level, I think is something that hopefully will over time benefit the consumer, benefit the homeowner. And I think if we're going to become the best industry that we can be, which we all, I think if we're being honest, we have to recognize that we have been an inefficient industry. In order to meet the demands and the needs for housing in this country, we have to start thinking differently. So what we're really looking for in partners through acquisition are people that are going to embrace that change and embrace the investments that we can make, while at the same time recognizing this is still a local business and those local relationships matter. So threading that needle is something that we talk a lot about with our targets.
Do you actually have people that you reach out to that you want to buy who tell you, oh, I don't want to change?
You'd be surprised, but I think more people are coming around to that thought process. I think as you think about the consolidation that's occurred in our space. You know,
Yeah.
BFS has made some significant consolidation plays with, you know, with BMC
Alpine
and
as an example. Yeah.
ProBuild, Alpine, and they have built an incredible business over there. And we have a ton of respect for them, and they've taken the industry forward in a lot of ways. And I would hope that people would say we've done the same. And I think, you know, we're making investments, they're making investments, and it's no knock on independents or many of the people that are probably on this call. But the reality of it is, the larger you get, the more you can invest in certain areas of the business. And so we can spread, just like BFS can, we can spread the investment in technology over a much larger revenue base. And it's just the investment that's needed to take this industry to the next level is immense. And that's why we're focused on that. And hopefully we can bring some efficiency to the space, which ultimately I think will be best for the industry long term.
I'm sure some people really, bite into that. Robert, same question for you with regard to the evolution of what you guys care about and look for these days, maybe compared with a few years ago. Absolutely the same, or have things evolved?
I hate to
Robert?
be boring, but I would say it's the same. I mean, our strategy and targeted company has been the same. I would say for sellers, 9.9 times out of 10, it's, do you have a good culture and are you going to take care of my employees? Obviously, a lot has changed in the last 5 years with the noise that we keep talking about. But again, I go back to the fundamentals. The long-term fundamentals for this industry are strong, and those haven't changed. And the need for people like us is immense. So I would say it's pretty consistent.
How important is what the Fed is doing or not doing? What impact does it have on your decision to make a deal or not make a deal? In other words, if the Federal Reserve does not reduce rates as much as people are expecting right now, does that slow deals, or does that really matter less than other things?
Well,
To you, Robert.
to Robert.
Okay, Jim, go first. Go ahead.
So I think a lot of people are focused on what the Fed is doing and thinking that that's going to really affect our industry. The Federal Reserve's interest rate moves really affect the more near-term aspect of the yield curve. What we're focused on is really the long-term nature of interest rates and how they affect mortgage rates, and that's really dependent upon inflation risk, economic risk. So what we track is kind of the spread between mortgage rates and the 10-year. And, right now that spread has expanded. Right now it's about 240, 250 basis points versus historical average. It's about 180 basis points over the last 30 years. So we feel like that spread hopefully can tighten, bring mortgage rates down. But while everyone focuses on the Fed as what's going to really affect our industry, I think more importantly, it's a lot of the inflationary risk and what's going to happen with just overall economic indicators and aspects. I think that's what we're focused on. So again, more noise out there from, all the talk around what the Fed's going to do. And while that obviously has a slight impact, I think the longer term aspects of how inflation plays out and just the overall economic indicators are going to really affect interest rate. But at the same time, I think we have to recognize as an industry, we've sold a lot of homes over the last 50 years at 7-8% mortgage rates too. So the challenge right now is just the digestion of mortgage rates going from 3-4% to 7%, and what that's had as from an affordability perspective. But I think ultimately people will settle in and the macro dynamics of our industry will take hold, which I think we all feel is positive.
Yeah. We're getting some questions in. Two of the questions involve QXO and Beeken. John, I'm going to present it this way because the questions basically are sort of the impact on the industry of a mega deal like QXO buying Beeken, particularly because QXO talks a lot about digital efficiency and the like, something that Jim and Robert are both big believers at their companies. John, when you're talking to a customer and they hear about a deal like the Home Depot buying SRS or BMC, merging with BFS or QXO, do you have to talk to them and almost talk them down or help them understand how this impacts their deal?
Well, and I think it's a little different about how it might impact their business overall and their decision to potentially enter a transaction. As you get somebody like QXO and you see more consolidation, this is still a very fragmented business, and QXO entering the business will be, I don't think, a game changer. It just simply changes the playing field of the people out there that can execute transactions and are interested in consolidating the business. So it's really adding one more consolidator. And frankly, right now the top 5 or 10, or the top 5 businesses out there, I guess 84, BFS,
USLVM.
and the rest. I mean, they still only represent 25% of the overall population out there in the industry. So there's still a lot of roll up to go. I view it as just another entrance of somebody who doesn't quite understand the industry, and it's going to come in with a lot of people, frankly, who are there. They buy Beeken, then who's going to wag the tail, so to speak? So.
Yeah. Another question that came in, actually, and I can ask this of all three of you. When you guys are talking with people about selling or buying or whatever, do you get any sense that the Home Depot, Lowe's, Amazon, or some other non-traditional buyer is in the mix? I mean, are you hearing talk that Lowe's is looking at something or Home Depot is looking at something? Because I think there's this belief that maybe Home Depot bought all it needs to buy right now, and they're not going to be in it anymore. But Lowe's may be interested in somebody as a result. So are any of those big players, as far as you've heard, looking around?
Yeah, I guess I can start with that. And I guess my overall answer to, the QXOs, the Home Depots, and I come from a sports background, and I think iron sharpens iron. I think in the more competitive nature that we have in our space, I think is ultimately going to make us all better, in my opinion. So while, sitting on the deal side, you love to have proprietary deals and you love to not have a lot of competition in those. At the same time, I think from an industry perspective, having someone like Brad Jacobs and his track record of building great companies, having someone like Home Depot that obviously has built an incredible business and has invested in technology and invested in customer-facing technology that hopefully can change the industry in a big way, I think is ultimately going to be a positive for our space. And so, I see it as an opportunity, even though maybe a little bit more competitive on deals. And yes, we are seeing them look at things. And I think, again, that's a positive, because I think it shows the market that there's a lot of investment out there from, some of the biggest public companies like Home Depot, Lowe's in our space, but then also new entrants like QXO and Brad Jacobs. And then we're also seeing a lot of middle market private equity look at deals as well. So I think ultimately that's a positive for our space, because there's a lot of investment that could come into the space, which ultimately moves the industry forward.
Yeah. Robert, I just got a question that basically says, with the distribution channel continuing to consolidate, what should vendor partners expect when it comes to companies starting to come together? And I think a great example of that is Nation's Best. I mean, you had all these disparate companies that were small, and they may have been part of a buying group or not. But now there's the opportunity to buy collectively and on behalf of the group. So if I'm a vendor serving your kinds of companies, what should I think of the fact that you're buying up some of these companies?
Yeah, and I think the question is more directed at, the Do It Best of the world acquiring True Value potentially, and how that impacts us in our stores.
Feel free to talk about that too.
Yeah. So to add what Jim said, I mean, at the end of the day, some folks may not like to hear this, but getting bigger Consolidation typically means efficiency, bigger pockets, invest in technology, better warehouses, right? I mean, with the do it best true value, it's not a merger, call it an acquisition or a merger. You know, our stores and all these independents out there, hardware stores and home centers, over time, you would think are going to have potentially better rebates and better pricing and whatnot. So I would say all that, again, it creates a lot of noise. There are definitely challenges. I mean, we have a lot of stores that we acquired that we're acquiring that are true value, and they're not happy today just because of all the stuff they're having to go through. But I guarantee you in a year or two or three, they're going to be a lot happier.
Yeah.
So I would say consolidation, whether it's acquirers like us buying other stores, big guys like USLBM and BFS, and this QXO now entering the space.
Yeah.
All that's a net positive, like Jim said. And then on the warehouse distribution side, I would say it's a big net positive too. I mean, there are a lot of smaller regional players out there too, but if you look at the big ones on the co-op kind of retail side of the house, there's only, call it three or so that are really big.
Sure.
And I think Craig, one comment that I'd make on that from the vendor side, and I'm sure John from his days at Masonite can speak to this, but when we acquire companies and we start talking to our vendor partners, we have a responsibility as the acquirer to really go to our vendor partners and show how we're going to create value for them through the consolidation in the space. And I think that's a big part of being a consolidator and acquirer in the space, is you have to truly treat your vendors like partners and show how you're going to create value, whether that be, you know, shifting share from one vendor to another if there's opportunity there, or helping them get into new customer segments. And so I think it's an important part of the acquisition process, is not only focusing on your customer and focusing on the company that you're buying, how you're going to make them potentially more profitable, but also how are you going to make the vendor partners more profitable through that relationship. And I think that's ultimately what's helped drive us here at USLBM, is really treating our vendor partners like true partners and helping them grow their business as well.
Well, that's an interesting point too, Jim. And back to the prior question about QXO getting into it, Home Depot, Lowe's, and so forth. Within the immediate space we operate in, again, lumber, trusses, you know, in the dealer segment, BFS, USLBM, 84, they're all known entities to the vendors in the marketplace. And when they make an acquisition, they know exactly what to expect. And I think with the addition of QXO doing a deal, with Home Depot doing a deal, then the vendor partners might look at that just a little bit differently, because the expectations for how those vendor partners will be treated at the end of the day might change.
Yeah. Another question has come in, and it's sort of related to QXO, and it also relates to what Jim was saying about becoming digital leaders. And the question is, how do you think artificial intelligence, AI, will affect the industry? And how do we get very traditional people to adopt these scary AI tools? Robert, it's funny because when I think about this, I also think of a product that Nation's Best invented called Tracula, which, if you can explain to people, it does help provide efficiencies. But more generally, you know, if there's any companies that could probably, you know, stand to have digital and technological improvements, it's small dealers. So when you guys are looking at a company, are you thinking, oh, well, we'll put in this, we'll put in that, we'll give them AI and watch the profits bloom?
Yeah, so I'm no expert in AI, so I'm not going to get involved in detail there. But the short answer is 1,000%, right? Especially when you're talking about small, you know, 1-2 store, smaller town, independent owner. I mean, the need for basic efficiencies with technology, whether it's how you cycle count using Tracula, or do you even utilize your software correctly to review your financials, to collect your receivables, to whatever, like very basic stuff. We do a ton of that. And that's not very costly. I mean, we have a strong team here that's very ingrained in our system that we use and the few tools that we have. And so clearly we're looking at AI. I know our CFO and COO spends a lot of time there, and so does our owner, and how we can leverage that for our industry. But I would say there's so much more room for us to take advantage of with very basic technological tools. I would say that's where our focus is right now.
Yeah. John, I'm going to come back to you next, and then I'm going to go to Jim with the same question, which is how technological should you be to be attractive? Because theoretically, my impression is that if you're buying, you really don't want them to be at the top of their game because then you don't get as much upside benefit. At the same time, if you're a seller, you may decide that if you added technology that makes you more attractive, or at the same time, you may say, well, they're going to discount that. And so I'm not going to spend that money on AI improvements or tech improvements. So, John, when you talk to people who are selling, what kind of advice do you give them about how technologically up to date they should be?
Well, I don't think we advise them. They are where they are at the point, when we start the process with them. I think that smaller, it's just a fact of life. Smaller dealers cannot invest, to Jim's point, cannot invest the money quickly enough and the capital quickly enough to get up to where they need to be within the industry in terms of configurators and online software and things like that. So I would say that technology makes deals a bit more complicated sometimes because the buyer may have a platform they're using, and if they buy somebody who has this ingrained platform, how do they transit that platform into the buyer's platform? So frankly, probably to your first point, Craig, a more simplistic business actually is viewed more favorably from a buyer, but I would let Jim answer that.
Yeah, Jim, do you want caveman companies?
I think the biggest thing that I would say independents and people that are thinking about transacting their business can do to prepare is not necessarily make the investments, because that's obviously costly, but have the conversations with your customers on what they're looking for, what are going to solve their problems long term. I think that's one of the things that we've done here at USLBM. We've spent a lot of time on voice of customer, trying to understand what is going to really help take their businesses to the next level. And so, we have a very diverse business here at USLBM and a lot of different product categories, a lot of different customer segments. So we're trying to take an approach that is going to meet their needs where they're at, and helping us understand, at the local level with the businesses that we're acquiring, what those needs are as well, will help us get a head start when we actually acquire these companies and help them go to that next level through the investments we're making. So I think that's the area that I would encourage people, and when we're talking to people, is to really focus on, is help us get a head start by understanding what your customers' needs are. Because if we're going to end up, again, taking our industry forward, we're going to have to really understand what the needs are of our customers so we can invest in those areas.
Yeah, of course,
And
the customers may not know what they want or
right.
need.
Well, suffice it to say, any of the large consolidators are thinking very heavily about technology, about what the future looks like, as Jim said, making our industry better.
Yeah.
So the advice to any seller is be prepared. You're going to get on a road, and it can be a really great road too, to really update your business and to make your business more effective and more efficient.
All right. To that end, by the way, I just did a webinar about 2 weeks ago on retail tech trends from the National Retail Federation's big show. And the retail director, VP at Epicor, was one of the people I interviewed there. And in some ways, I think AI is going to be led by the distributors and the ERP companies, sometimes more than the dealers. Because they've got the mass and the size to be able to take advantage of some of these things. Yes, when you get up to the size of USLBM, you can do it on your own. But I think if you're below 100 million, it's a challenge. We have a new question in. I'm going to run across the board here. I'll start with Jim. In general, what does the Trump administration and the changes that are expected at DOJ and probably Federal Trade Commission and other things, how does the new administration in Washington affect M&A?
Well, that's a loaded question there, but I'll try to.
That's why they asked it.
Answer
Glad you're answering it first, Jim.
Yeah. I'll try to answer it as efficiently as I can. I guess, first, I would say anytime that there's an election and there's uncertainty around policy, administration, it creates just uncertainty in people's minds. And I think we saw that last year, right? I think the fact that whether you're on the left or the right, we kind of know what we're getting now going into this year. Obviously, there's some, noise about what the tariff impact is going to be, what certain policies, what impact they're going to have. But I think we kind of know the general direction of where the things are going under the new administration. So I think that will help just alleviate some of the uncertainty risk around, the dichotomy of various policy changes. And so first and foremost, I think that'll be a positive. I think the deregulation potentially, a lot of people may not realize, 30% of the cost of a home is all the things before you even put a shovel in the ground. If we're going to really make changes to the affordability aspect in this country, I think we need to try to improve the deregulation, the regulation aspects. And, that's both on the federal level and the local level. I think the tax implications, ultimately, I think hopefully, if the tax cuts get extended and some of the things that Trump wants to do around that, I think will be positive economically. And then on the contrary to that, I think we got to wade through what the impacts of potential tariffs are going to be on the inflationary environment and all the things that may affect the yield curve and the interest rate environment that we talked about. So bottom line, I think it's going to be challenging as we work through this, but ultimately I think that in the end, in our industry, the macro dynamics are going to take hold, and we're anywhere between 3 to 4 million housing units undersupplied in this country. I think ultimately that will come to play, and that's going to be a positive tailwind for our industry. And hopefully we're all ready to take advantage of that.
Robert, I'm going to add a top question to Jim's answer, which is, do you expect that because of uncertainty over where the administration is going right now, Robert, that that could slow down some signing of deals?
So I'm going to answer it in our eyes, okay, the eyes of Nation's Best with the targeted acquirers or companies that we look at. The answer is very simply no.
Okay.
I don't think there's going to be a lot of sellers out there who are waiting to have a 4% bump in sales and an 8% bump in their EBITDA next year to sell, because they are retiring in 2 years and there's no kids to take over, right? So agree with everything Jim said. To oversimplify this whole thing, though, if you look at your chart, you look at where rates were last year, a lot of the issues we're dealing with, the cost burden, the affordability, all the things, there were still more deals that happened last year than they did pre-COVID. So these challenges are real and it's getting worse, no doubt. But ultimately, the succession is a real issue in this space. Like John alluded to, there's a lot of dry powder out there from strategics like us and from PE firms, etc. So I would say it's all very serious, but it's all noise. And the long-term macro tailwinds are real.
John, we just got the buyer's perspective. What's the seller's perspective on this?
Well, I think, again, I think you have to simplify it. It does come around. What's your outlook for the housing industry? If I'm a seller and I'm going to retire in a year or 2 years or 3 years, I'm ultimately going to try to capture the most value I can for my business. And do they feel that Trump coming into the office and deregulation taking hold and then they might want to hold out. And Robert's right. I think if it's right in front of you and you have to retire quickly, you don't have a succession plan. I think a lot of sellers, though, are going to wait and see how this plays out to see if they can add a bit to their bottom line to get a better value for their business. And I think every indication of what's going on will be good for that. I think the challenge, though, as Jim said, there's going to be some chaos, and chaos creates uncertainty in many cases, and particularly around the tariff front and costs. I mean, we just got through this, we just got through all the inflation and all the challenges around that. And buyers need long-term sustainability, and this may create some bumps for them.
Right. While I'm waiting for the next question to come in, John, a related question, because your background was also in the manufacturing industry and you did some deals on when you were a manufacturer, is the nature of buying and selling a manufacturer different than buying and selling a building material supplier?
I'd add a third piece in there, and I'd add a wholesaler in there. So is there a difference with manufacturers, wholesalers, and dealers?
Good.
And I know, frankly, the transaction process is very similar. I think it almost falls into more the difference between the buyers involved and the sellers in terms of size. If you have a public company involved, one that doesn't do a lot of transactions, it becomes a much more complex deal. You have more attorneys involved, you have more banks involved. If you have a small business, it flows. So it's really not a difference, Craig, between the types of transaction from wholesaler, manufacturer, dealer, as it is really who the buyers and sellers are in terms of public, private, size, and so forth.
Okay, well, that makes sense. As I said, I'm waiting for the next questions. I am going to go to Keynote and I'm going to share, and this slide, hopefully you're looking at a slide that says Nation's Best in 2024 and before, right? Okay, good. So Robert, you're all over the map. I mean, what's the strategy here? Is there a geographic strategy along with a size strategy, or could any particular person anywhere in the country, Montana or North Dakota or whatever, become a Nation's Best member?
Yeah, I mean, the answer is very confusing because it's yes to all of what you said, which is a lot of it's contradictory. But at the end of the day, our main strategy is to look for the right company. So if we find an ideal company with a great culture, with great profitability, and it happens to be in a market we're not in, we'll look at it. Is it efficient geographically? Not the most, but as we keep growing, we end up finding clusters of companies to add within those geographical regions. So in the long term, it'll make more and more sense.
Is there a reason why there's a lot of Texas dots on the map? I mean, I know you're based in Texas, but is it just because of other reasons,
Yeah, I mean,
barbecue or,
No, I mean, at the end of the day, the Sun Belt smile states tend to be favorable for not just industry, but really any industry with population and employment growth and typically lower real estate cost and lease expense and labor and all the things. And so you're more likely, at least for us, to find a profitable EBITDA margin entity in Texas than you are in somewhere in the Northeast or somewhere else.
Yeah.
Again, not to say that these other markets aren't great markets, but you're more likely to find what we're looking for in these markets.
Okay. And Jim, I'm going to show the USLBM map there. Can you tell me what the thinking was behind buying Texas Tool Traders?
Yeah, so obviously the Texas market is one of the strongest markets in the country. I know right now maybe cycling a little hard just given the dynamics that are occurring in the space, but long term Texas is viewed, and we have a very bullish view on the Texas market. So first and foremost, Texas is an area where we continue to invest in, as you've seen over the last couple of years. But
Okay,
it's
great.
specific to the Texas tool trader business. I think one of the things that we're focused on at USLBM is selling as much as we can of the products that go into a house. And one of the things that a lot of people probably don't realize, many people on this call probably do, but a lot of people maybe outside of the space, there are differences in our industry based on individual markets and individual customer segments on who's buying the product, right? And how the product is sold to the different customer segments. And so in Texas, the framers in Texas buy kind of their tools and their fasteners direct from people like Texas Tool Traders. And our customer on the framing lumber side is more direct to the builder. And so if we wanted to sell more of that product category on the fastener side, we needed to buy a business like Texas Tool Traders in order to get access to that customer segment. And so that may not be the case in other markets. You may not see us buy like business in other markets, but there may be situations where in order to get access to a certain customer segment, you have to purchase a business like a Texas Tool Trader. And they've been a great ad for us. I think they'll add to our existing platform in Texas and allow us to service a variety of customer segments and customer bases in the Texas market, which will be a strong market long term.
Yeah. We got several more questions that came in, so I'm going to ask you to be fairly quick on some of these. Let's start with several questions came in about property. I think historically, you bought the yard, you bought the land or under the yard, and if you're a small dealer, the land is probably as valuable to you as the operation. What's the questions are? What is the attitude toward real estate these days? And a related question is. If you were to rent the product, if you were to rent the property, is there a ratio you use? For example, a ratio related to EBITDA that determines how much you would pay to rent the property if you weren't going to buy it. Well, any one of you can answer those questions.
So
I'll just throw it out.
what I would say on a broad basis in our industry, property rarely goes with the transaction. Most of these guys don't really want to be property owners. What they want is a fair lease, and the lease is calculated on fair market value, nothing to do with EBITDA, nothing to do with anything else. So the transaction, the enterprise value generally excludes real estate. We do work with sellers though on finding a lease buyback situation if they truly want to monetize the real estate rather than just live on the rent. But frankly, we advise them to go ahead. It's a secondary flow of income if they're going into retirement, to have a solid lease with the acquirer. So
one of the ways I think I would describe from a buyer's perspective is I'd agree with John. We don't want to necessarily be in the real estate business and have a lot of capital tied up in our real estate. We'd rather use that to grow our business in other ways, invest in working capital, invest in new acquisitions. So we're somewhat indifferent though on how that real estate wants to be rented. If the seller wants to hang on to it, we're fine entering into a market lease for that property. But as John said, we have a ton of relationships with various sale leaseback providers that we can help facilitate that in conjunction with a transaction or even down the road if sellers want to hang on to the real estate for a period of time and then execute on a sale leaseback down the road. One thing to keep in mind from a sale leaseback perspective is a lot of the sale leaseback providers, I would say, I don't want to say they don't care about the actual real estate aspect because they do care about the quality of the real estate, but more importantly, they care about the quality of the tenant and the tenant's ability to pay rent and the ability to kind of underwrite that cash flow stream over the period of the rental period. And so that's why, having a larger tenant, again, sounds self-serving, but having a larger tenant like USLBM help facilitate that can actually make that transaction more beneficial for the seller because it's less risk to a sale leaseback provider than a one-off independent yard.
Yeah. Robert, do you want to jump in or shall I?
Sure. Yeah. I don't have much to add. These guys covered it all. The one thing that I'll add to this, and I'm not giving advice on this at all, obviously, but if you're a seller, and one of your hiccups is rents, if you're in an expensive market and your rents appear elevated in the eyes of a buyer, even if they're market rents, like John said, because he's right. We're not looking to get a deal on rents, right? Lower rents are always better. Yeah. But if a seller is having a struggle and real estate is the issue, they may want to consider reevaluating what their lease expense is, whether they work with a John or a realtor or whatever the case may be, because that can be a hurdle for buyers.
Yeah. I have been surprised by the number of companies that have reached out to me and said, Craig, if you know of opportunities in these acquisitions where they don't care about the property, have them call me. And so, there's that. There is a question here. It's an interesting one. And it relates to Robert, how do you find these opportunities? Do you just wait for a broker to come to you, or are you actively out there, dialing and asking, hi, would you like to be sold? How do you find good small companies?
Going back to everything we're talking about, the space in this industry, it's just very fragmented, and there are thousands of company owners out there needing buyers like us. And so they 9 times out of 10, they come to us, if not more so, whether it's through our vendor relationships, or I would say about half the time it's folks that we bought companies from who refer their colleagues to us.
Okay, great.
And I would say very relationship oriented business. You know, that it's kind of like when I was courting my wife. I have to call people 3 or 4 times, or even maybe 10 or 11 times before they actually take my call. But that really is a huge component of this industry, is relationship building. Ultimately, you need to build trust with the acquired company for years in some instances. You know, they need to trust that we're going to have their best interests at heart, their employees' best interests at heart, and we need to trust that they're going to have the right mindset coming into our ownership on trying to take this business forward too. So that takes time, and that takes many conversations over many years in some instances.
Yeah. We just have 4 minutes left, or 3 minutes left now. And I've got 2 questions that are outstanding that in a sense are related. One is, what's the future of two-step distributors in consolidation? But the other is just basically, what is the future of consolidation? How many companies are there out there? And I'll ask it in this way. Jim, you had said before we got on that you thought that the market, I think for the pro dealer market, is maybe 185 billion, and you were saying you take BFS and USLBM and 84, maybe it's 20%. Imagine life 20 years from now. What percentage of all the money out there would be taken by, let's say, 10 companies? How much consolidation are we going to have in the future? Is it going to be 30%, 50%, 75% ownership by the dominants? What's your belief?
Yeah, I mean, it's hard to predict the future, but I guess I'll answer it this way. I think more consolidation will be better for our industry as a whole, for all the things we talked about earlier. I mean, the investments that we can make as an industry, having bigger companies, hopefully the efficiencies that can be gained around that. And I guess one segment of our industry that you can look at as maybe a precursor to what may happen is the roofing industry. And I, come from the early part of my career, I was with SRS, and so I saw that firsthand. And you see, how that industry has evolved and how that industry has been able to elevate, valuations in that space as a result of consolidation. And now ultimately, SRS partnering with Home Depot and what that could potentially do to the space. Again, I think consolidation, while it may seem like a nasty word to local independents out there, I think ultimately the consolidation will drive efficiencies for our industry, which again will be ultimately better for the industry as a whole.
Yeah. John, do you think people who want to buy will ever run out of companies they want to buy?
No, I think within our lifetimes, we're safe on that front. They're out there to be done. And quickly on the two-step distribution, there's consolidation in the two-step industry as well. There's going to have to be, because as the one-step dealer markets get bigger, there's going to always be a need for two-step distribution, but it's going to be a consolidated need for two-step distribution.
Yeah. Robert, I'm going to finish with you. One of the reasons I'm in a career in which journalism has pretty much collapsed. Do you ever find yourself coming to a day in which you won't have any work to do any longer, Robert?
No, I think this webcast tells you that the answer is a hard no.
That's great.
And one thing I'll add to what Jim said, by the way, is, consolidation and getting bigger doesn't always mean big corporate and, consistency across the board. And I think consolidators like USLBM and the many others out there do a very good job at keeping the companies are acquiring pretty independent for the most part. So that's just one global comment on that.
Interesting. I thank all of you for taking part. I am not sure what is on the screen right now because I tried to.
Greg.
Pardon?
It's just you.
Just me. Okay. Well, I was trying to finish up with the slide showing how to reach all of you. All of you who are participants in this webinar as attendees, you will get a copy of the presentation. I thank the gentleman. I also will make a video available down the line. but I want to thank all of you for taking part and joining us. So thank you very much. So goodbye to
Thank you
everybody.
for having us.
Thank
Thank
you.
you,
I'm
Craig.
going
Thanks
to,
for having us.